Hello, and welcome to Agents of Nonprofit. My name is Alexander Lapa, and I'm here to speak with everyday superheroes helping nonprofits. Joining me today is Courtney De Ronde to talk about accounting. Courtney, welcome to the show.
Thanks for having me, Alex.
So, as we begin, I was wondering if you could share your superhero origin story. That is to say, how did you get started working with in the world of accounting and anything in the nonprofit space?
Yeah, so I studied accounting in college and started my career at a small firm in Iowa. And my first job there was to do tax work primarily. And then in the summers, to keep people busy, like me, we did a few audits of nonprofit organizations. So there were local organizations in our community that had state and federal grants, and they had to submit an audit to the government. And so I got to do that kind of work in the summer, and I loved it. Now, part of it was I loved being out of the office. I loved interacting with people more so than, sitting at my desk preparing tax returns during the wintertime. But I started to really develop this deep understanding of the nonprofit industry, the nuance in the accounting and the financial reporting, as that directly related to the job I was doing. But also, as I progressed in my career, developed a full specialized audit practice with a nonprofit industry specialization because there's just so much nuance that goes into leading a nonprofit organization. There's volunteer boards involved. There's different business models. There's fundraising. There's grants. There's fee for service. There was just so much to it that went beyond just financial reporting that also helped me understand the dynamics of the impact those organizations make in the community and what it takes to run one of those organizations. And so that led me down that path and eventually became a pretty significant part of our firm is auditing nonprofit organizations. And then now our virtual CFO and controller practice also serves some nonprofits in that way as well.
Awesome. Yeah, I find in general that it's obviously a generalization, but the people who work in the nonprofit space, I find are magical people, passionate people, low egos, mission focused on the mission. In general, makes them tend to be pleasant people as well, as opposed to not that the other ones are not for the for-profit world, but it's just another layer, another level, so to speak.
Yeah, there's a connection to the impact that they're making that
Right.
you don't always find in private business. I think also the volunteer element of the board, that there's a whole set of people who have volunteered their time to serve this fiduciary responsibility. That's been really rewarding as well, to be involved with helping to educate the board on the finances and what that means, what it tells about the organization for their sustainability, for their risk, for their own understanding in their role as fiduciaries. And so that extra element of volunteer governance has also been a really interesting dynamic to get to be involved with as well.
And then bring us up to speed today, in the past few years, what have you been up to with Forge Ahead?
Yeah, so Forge is our firm. We're financial and management consultants. So we still have our audit practice that I launched several years ago when we were part of another firm. That firm was called TDT, CPAs and Advisors. I eventually became the CEO there, but we ended up splitting off that audit practice and our virtual CFO and controller practice to become Forge. And we essentially left TDT with a pretty traditional tax practice. So Forge really does audits of nonprofits. We also audit some small businesses, some privately held companies, and a lot of employee benefit plans. And then our virtual controller and CFO practice provides ongoing fractional virtual support for nonprofits and privately held companies. And then we added a management consulting practice when we became Forge. And so that's really going beyond finance into leadership, productivity, and human intelligence to help leaders really scale themselves and their organizations. The better we are at using the finances to tell the story of what's happening in the business or the organization, the more it points to those other areas that then leaders have questions with. If this financial result reveals I have a capacity management problem. How do I solve that is more of a management consulting or leadership question. And so we wanted to add those capabilities and services as Forge. And so that's what we did. We launched, separated off from TDT at the end of 2022. And so we're almost 3 years in here to being Forge with the addition of the management consulting services.
So for today's purposes, I think we'll focus on the first two, the audits and the controller practices. And I would love to start with the second one, actually, because I'm curious to know how that works. How does a typical engagement look like when working with a fractional, is it CFO or accountant or all the different roles that you offer for a nonprofit?
Yeah, so we like to help people understand that every organization needs three different functions in their finance and accounting component of their company: the bookkeeper, the controller, and the CFO. And most organizations, private or nonprofit, aren't large enough to have full time dedicated people in each of those roles. But each of those roles has a distinct function and outcome that they're performing and a unique set of experience and expertise that they need. And so we provide fractional support so that we can augment the team that they have in place so that they get access to all three of those functions without adding a bunch of full-time roles. So the challenge that most organizations have is that they can't afford a full-time bookkeeper, a full-time controller, and a full-time CFO. And even if they could, they wouldn't fully utilize them. So they end up having one person trying to do all three. And that just doesn't work. It's really challenging for someone to be in the details and in the day-to-day transactions like a bookkeeper, and then somehow put on a different hat and look big picture, forward thinking, budgeting, forecasting, projections. They're just different things that are required of those roles. And even if you could find a unicorn who can use both sides of the brain that way and kind of navigate those different perspectives, you're most likely going to be underpaying or overpaying. So you're going to pay a bookkeeper and be disappointed that they can't function like a CFO, or you're going to pay a CFO and a good portion of their time is bookkeeping and controller that really should be at a lower rate. And so that's why we do this, is to help provide access to each of those different functions so that the organization has visibility on their numbers, reliability in the information, and predictability through the forward-looking CFO role.
So bookkeeper, I'm very familiar with that role, right? It's day-to-day, ground level, invoices, expenses, all that kind of good stuff. CFO, I think we're pretty clear on as well, at least I am, in terms of the roles, responsibilities at a high level. Talk to me, if you could just explain a bit more about the controller, which is in between. What do their normal roles and responsibilities entail?
Yeah, so the controller is really about oversight and insight. So oversight, meaning a layer of control, internal control, checks and balances over the bookkeeping function. And then insights on the financials, translating the numbers into operational insights for the users of the financials. So the executive director, maybe the department lead heads or the program directors, for sure the board, the finance committee. That's really the role of the controller. So the bookkeeper is really about reliability, like this information is accurate and timely and we can trust it. And the controller is about visibility, having information to look at, to review, to analyze. So they're serving that outcome of insight and oversight. Both of those roles, the bookkeeper and the controller, are focused on what's already happened. So the bookkeeper is capturing what's happened, the controller is helping to report on it, where the CFO is looking to the future and predicting what may happen using assumptions and models to forecast and project. But the controller and bookkeeper are still squarely in that historical financial information.
And then when you say you offer fractional services, how does that differ from part-time? Like how would you define fractional services and how does it differ
Yeah,
from
so
part-time?
yeah, so fractional is we hire our own team members. So we have full-time employees here that we employ and pay their benefits. We train them, we develop them, we do everything that they need as our employees, and we outsource them on a fractional basis, meaning that they serve multiple organizations throughout the month, throughout the quarter, throughout the year. And so the organization is getting a fraction of a full-time person, but they're not hiring someone part-time. And we're also not connecting contractors. So some organizations will do that where they're essentially a go-between or almost like a broker of contractors, where we have a bunch of people that contract and we connect them to those clients and they're kind of on their own after they're connected. Our model is that these are our full-time team members, and we are assigning them to multiple clients to serve. The huge benefit of that is that we have all these team members who are familiar with the way that we serve, the softwares we use, the processes that we use. So if somebody is sick, somebody's on vacation, somebody's on maternity leave, or somebody leaves our firm, we have other people to step in and continue providing that service, which is different than if you were employing your own person part-time or if you were working through contractors.
The way I read once how fractional services work is it's not just a matter of a portion of their time, but it's also a portion of their services, because you can't do, of course, a full-time job when you don't have full-time capacity. And if I remember off the top of my head what that chart looked like, let's say the CFO has 10 responsibilities, 10 duties, 10 outcomes to perform. There is a conversation that happens of those 10, which are the ones that are really, really critical that can be performed by a fractional CFO. And it might be four of them, might be five of them, maybe three of them. But basically, you're going to pay then a portion of what you would pay a normal full-time employee to be a CFO, and get only a portion of those responsibilities outcomes. Would you say that's kind of like you're in line with what you have in mind, or something different than that?
Yeah, we actually have different set standard packages. So we've looked at what we believe from our experience an organization needs as a minimum from this role. And so there's a standard package for a controller, which means we're going to do the month-end close. We're going to review the bookkeeper's work. We're going to provide insights on the financial statements. We're going to meet with you and share those insights, answer any questions. And then annually, we're going to meet on a more strategic, big picture perspective as well. That's our minimum. And so for us to be engaged as a fractional virtual controller, we at least need to do those things each month. And then beyond that, people can add on, additional services or expand the scope. And then same thing goes for CFO. There's a couple different packages where we're at least going to do the budget. We're at least going to do biannual strategy sessions, and we're going to do a dashboard with your key metrics to report on. If you want to add cash flow forecasting, if you want to add more meetings, if you want to add additional things, we can do that. But at a base level for us to engage as a controller or CFO, that's where we start.
Let's jump into audits. I have personally a love-hate relationship with my accountant, but he ends up fixing stuff all the time. And I love him for that, because I make mistakes, and I don't think he would call what he does as an official audit, but the idea is that by reviewing my bookkeeping, keeping me honest, making corrections, making recommendations, it makes sure I'm not veering off the path too much. How do audits work or how does the audit process look like for nonprofits?
Yeah, so an audit is a service that can be performed by a CPA that provides what they call the highest level of assurance. So we're actually expressing an opinion in a written report on the financial statements. So we're expressing an opinion based on the risk that we've assessed and the procedures that we've designed in order to give an opinion about whether the financials and the disclosures are materially correct in accordance with a basis of accounting. So with usually it's generally accepted accounting principles, GAAP. So that's the technical kind of definition of an audit. The purpose of an audit is to give stakeholders assurance that they can rely on this information. So they're using these financial statements to make decisions about whether they should grant money, whether they should make loans, whether they should invest. And so it's really a service to support the public benefit to know if they can rely on this information. Most nonprofits are required to have an audit if they have a certain level of grants from federal or state governments. If they have a certain, in the US, if they have a certain, exceed a certain threshold of federal grants, they have to have an additional audit that is based on their compliance with the requirements attached to the grant. So there's an audit of both the financials and of the organization's compliance with the grant requirements. So these are all very specialized types of reporting when it comes to nonprofits, because there's additional requirements that you have to give your opinion on, which for the nonprofit means there's strings attached to the money that you get. And you have a risk of not being able to continue receiving that money, or perhaps even having to refund it if you don't comply. And so our approach in auditing nonprofits is really to try to help educate the organizations about those requirements so that they can be in compliance with them. Our job as auditors is to test whether or not they were, but nobody wins if they aren't, right? If they are not in compliance and they perhaps have to return funds, or they're at risk of getting additional funds, they can't continue that work towards their mission without finding another source. And what do we get? There's nothing for us to gain by finding things that they've done wrong. That we have to report what we found, whether it was right or wrong. So our goal, our approach, which may be different from other firms, is that we want them to understand what they're supposed to do to help ensure that they can do it correctly. So we have a very educational, collaborative, kind of proactive approach. But that being said, we still have to assess the risk. We still have to perform the procedures, and we still have to report what went wrong. But we're looking more from a perspective of, we don't want to find things wrong and kind of be the gotcha, we're so smart. We want them to know what they have to do so that they can do it right, so that the public is served and that the funds are used appropriately and they can continue their mission.
I have this belief that most organizations and most people don't really like audits. Like, it's, in this case, a necessary evil, I'll call it. But there's always a certain amount of fear or uncertainty, hesitation about audits. Do you have any recommendations for nonprofits to be able to make the process as easy as for themselves as possible?
Yeah, I think the preparation for the audit goes a long way towards how you experience the time that the auditors are actually there. So having an understanding of grants and what is required, and having the processes and systems in place, the internal controls, that you've been documenting and doing things appropriately and recording them, capturing them, documenting them, that's going to make things go much more smoothly. The other thing is, if things are generally a mess, that's going to increase the risk for the auditors, which is going to mean they have to do more procedures. So auditors are required to understand the organization and their environment and their controls, and assess the risk of what could go wrong here that would lead these financials to be materially misstated. So the messier things are, the less documentation there is, the fewer the controls that there are, the more risk there is that something went wrong. And it could be intentional, it could be because of fraud, it could just be because of error, because there's no oversight or control. Either way, it's going to increase the extent of testing that an auditor is going to have to do. So having kind of your ducks in a row and having things prepared is going to make things go much more smoothly than if everything feels like a mess. Then that's going to increase the risk.
Okay, so the takeaway here is, don't be messy. I like the fact that, I mean, some organizations are intentionally messy to avoid certain scrutiny. I don't know why, but it popped into my head the movie The Accountant, with yeah, which is a cool movie, and he was like a very hardcore attention to detail on the spectrum kind of person, and he found all the errors. But he had to go through a lot of these books and create all of these kinds of connections and associations between what was happening to figure out where things were or where things are, why things were happening. But is that, I mean, is there a more specific, more concrete tactic than just saying don't be messy? Like, can you break that down into actual, line by line? Here are three things that say that you should do to not be messy.
Yeah. So one thing is what we call reconciling accounts. So having documentation that supports that the balance in this account is what it should be. So there might be a spreadsheet that is attached to it that shows the transactions and the adjustments that have been made and shows this kind of supporting documentation. But sometimes what happens is people have a spreadsheet like that, and let's say that it shows that let's take contributions receivable, that we've had donors who have pledged money to us. And here's a list of all, 150 donors that have pledged money to us, and it totals $900,000. But the accounting records, whether that's in QuickBooks or Intact or whatever accounting system you're using, shows that your contributions receivable are $1 million. Well, that's instantly an issue that the books, the financials say 1 million, and you can only produce a list that shows 900,000. And that might be because there's a reconciling item and you haven't documented it appropriately. Or it might be that there's a misstatement and it's incorrect. And any misstatements we find are going to raise the risk that there's more misstatements to be found. So checking to make sure that your supporting documents match your financials before you provide them to the auditor is definitely going to make things go more smoothly. Having your processes and controls documented and making sure that you actually follow them is another way to make the audit go more smoothly. So I mentioned the auditors have to understand the organization and the controls that they have in place to assess the risk. And so if you tell us that that the treasurer of the board comes in every week and reviews the invoices before the bookkeeper pays them to make sure that they're paying actual legitimate organizational, bills. If you tell us that that's what happens, but there's no documentation that shows that, they've never initialed anything, they don't have any kind of documentation that shows that they've done that, then we can't rely on that control because if it's not documented, it's as if it doesn't exist. So having those things documented and actually doing what you say you do within your procedures and controls is going to reduce the risk and therefore make the audit go more smoothly. So those are a couple examples, but certainly glad to dig in more, Alex. But hopefully that gives a little bit more perspective on what we're talking about of how to be prepared and have your documentation in order.
It definitely helps. Yeah, thanks for that.
Hey, Alex here. I want to take a brief moment and thank you for listening. If you've enjoyed this episode so far, please consider sharing it with someone who would also benefit from its insights. It's these kinds of referrals that really help the show grow. You can also show your support by making a small donation. I don't do corporate sponsorships or product placements, so I rely on your support to keep the show going. You can visit my website, agentsofnonprofit.com, and click Support Us in the top menu. Thank you kindly.
I know you mentioned earlier in a previous conversation about a certain framework that you use. Is this in line with that kind of framework, or is a framework separate from that? And if so, how?
Yeah, so the framework that we use is actually in our management consulting practice.
Oh, okay.
It's called the Simple Scale Up System, and so it's separate from the financial side of the organization.
Okay. Yeah, I'm crossing streams here. Sorry for that. What about the business intelligence grader? That was another. Is that similar in the management side as well, or is
Right,
that also?
that's right. That is part of that management consulting framework, which we do use with our audit clients to help them understand some of those things that, like, once once they have their finances under control and have great visibility, the next thing, like I mentioned earlier, is usually, well, how do I solve these problems around people or leadership or capacity? And so, but that is the framework that we use within our management consulting practice. So it's up to you if you want to go into that or not.
Yeah, again, I'll stick to the first two, the audits and the controller part. So, but maybe I can ask the question then is, once the audit's been completed, once the bookkeeping and the controller has completed their job, I'm always curious to know the leap from data to decisions. Once you have everything's on paper, it's documented, it's accurate as best as it can be, risks are all calculated and so forth. To be able to take that and now say, okay, based on all of this, here's what we recommend. Is there any particular process you have for that or strategy, or is it just a conversation where you sit down and it's really unique per organization? Like, how does your general approach work in that element?
Yeah. So with an audit client, our recommendations are primarily around how they can improve internal controls. So ways that they can put more checks and balances in place. And we do present the financials to them and make sure that they understand what this tells them about where they're at. But the main purpose of the audit is to give external users of the financials, the government, the bank, the investors, assurance that they can rely on those numbers for their decision making. Within our outsourced accounting services, when we're serving as a virtual controller or a virtual CFO, we are providing more of that analysis on the financial statements. So the audit is typically for external users. The internal financial reports that we provide as a controller or a CFO are for management's use. So this is for the executive director, the finance committee, maybe the treasurer of the board. This is for their use on a month-by-month basis to understand where the organization is at financially and what are the results of the activities that they've been working through. And so our ability to help them understand that and translate it into more operational insights that they can use to make decisions comes from a deep understanding of nonprofit business models and financial reporting standards. So I'll give you a quick example that can sometimes throw people off, especially if they're serving in a nonprofit board and all their experience is in private industry. So sometimes you'll have a treasurer come in, maybe they're a strong business person, but this whole nonprofit financial reporting is new to them. There's a concept in nonprofit accounting called restricted gifts. And so donors can give a donation to an organization and they can restrict the use of the gift. So I'm going to give you $100,000, but you can only use it to set up a scholarship for a student majoring in accounting. Okay. The organization can receive that gift, but they have to track that it is restricted for that purpose. And they can only use those funds for that purpose. And when they use it for that purpose, it releases the restriction and it can offset the expense of that tuition for that particular year in which they use it. But that can be a very complicated thing to track. And what happens in that example is that the organization has $100,000 of cash, but it's not available for operations. It's not available for any old thing that they want. And so that dynamic can change the way you look at the financials. If you don't have that reported properly, it might look like we have plenty of cash, but in reality, a lot of it is restricted for a particular use. So that's just an example of how you have to understand the business models and the financial reporting to make sure people really see the full picture of what's available to them, what obligations that they have, and so on.
Yeah, doesn't make sense. I've heard different wording for it, restricted funding, restricted gifts, but yeah, I think we're talking about the same thing. And I know it's in the best interest of nonprofits to have as few of these as possible, so that they do have carte blanche, the ability to do whatever they want with the money, as opposed to being restricted on what they can and cannot do with it. But I get the point of it also from the funder's perspective of they have a very specific goal in mind and they want to make sure that money is put toward that goal as opposed to discretionary amounts.
Right. Yeah. It's so it's not that you don't want to have restricted gifts. You have more flexibility if you have unrestricted. But when you do accept restricted gifts, you have to make sure that you have the proper accounting in place to track it and report on it.
Taking a step back, I was wondering if there are any, or what are the common gaps, problems, issues that you see reappearing across nonprofits? Is it at the bookkeeping level, the control level, or CFO level? And if so, what are they typically?
Yeah, a lot of times, smaller nonprofit organizations, the gap is that they don't have that higher level of controller or CFO financial roles. So they tend to have a bookkeeper, maybe an accountant, maybe some clerks like an accounts payable clerk or an accounts receivable clerk, and they're really focused on processing transactions and capturing those transactions in an accounting system. But they don't have that additional role of the controller to provide oversight each month to review and make sure that those transactions have been recorded properly. And they don't have someone to help translate that information into essentially a decision support tool for the leaders of the organization. And so that is a very, very common gap. The other gap is that CFO function of, even if they have perhaps a controller in place and a bookkeeper in place, so they're getting visibility, they're getting reliability, they've got good oversight and insights, they have adequate reporting on what has already happened and they can use it to make decisions. That's great. But the next challenge is that when they try to grow and evolve and expand, they don't have the CFO level support to predict what these strategies will do for us. So maybe they've built a strategic plan, maybe they brought in a consultant, and the board and the leadership built a strategic plan and a vision for how they're going to expand their programs and they're going to get these grants and they're going to get this restricted funding, but they don't have the support to actually model that out and show what the financials would look like if we got this money, or what if we get the best case scenario, or what if it's the even better scenario, or what's the worst case scenario. They don't have the ability to model those different scenarios and tie back to their strategic plans. So they're essentially just making some pretty big bets on what's going to happen without the support to model it out before they take action.
You mentioned for smaller or nonprofits that they tend to have more gaps or more frequent gaps. I was curious to know if a nonprofit is just starting off, right, in their first year or a couple of years, are there any advices or any pieces of advice you could offer them to make sure that they're set up in the best possible way from the get-go? Like, is it about getting the proper accounting software? Is it about getting filling these roles, all three of them from the start? Like, what are the tips that you would recommend to really, from a financial perspective, start off strong and stay strong for an organization?
Yeah, so I'm going to say three things that you would focus on if you're starting off as a nonprofit, or you're new, smaller, and this is what you need to focus on. One, you have to have an accounting software. So we're not using just a check register or an Excel spreadsheet. You need something. It could be QuickBooks. That's totally fine. The online version of QuickBooks is a great place to start. It's very simple and easy to use, but you need an accounting software to capture all the transactions. You can connect the bank feed and it'll flow in automatically. You just have to have an accounting software. The second thing is you need a bookkeeper. You need a bookkeeper who understands nonprofit accounting. So this could be a part-time person that you hire. It could be someone you contract. It could be a firm that does fractional bookkeeping work. It doesn't matter, as long as it's someone who understands the nuance of recording transactions for your particular business models. And most nonprofits are having multiple business models. There's gifts and there's fee for service, or there's grants. There's usually at least two different streams of revenue, and they need to understand the different ways that you account for each of those. So accounting software is a must. A bookkeeper who understands nonprofit accounting is a must. And then the third thing is you have to have some level of internal control. Now, this is often happening through oversight, what we call detective controls. So there's preventative controls and there's detective controls. Preventative controls means we've got something in place that's going to prevent an error or a fraud from happening. That usually requires multiple people to be involved in the process to properly segregate the accountabilities. If you're new and you're small, that's probably not an option. So you have to then put in detective controls that would, after the fact, detect that something has gone wrong quickly after it has gone wrong. This is often having the executive director or the finance committee chair or the board president, someone else who's not involved in recording the transactions, paying the bills, receiving the money like the bookkeeper is, someone else who is providing oversight, reviewing the transactions, reviewing the source documents. And that does require additional time and effort by that role, whether it's the director or a volunteer board member. But you must have that. There are so many stories of organizations who did not have proper controls in place to prevent or detect an error or a fraud, which then brought the organization down. And board members of nonprofits have a fiduciary responsibility for those types of things. And so you can put yourself at risk, as you know, by being a board member. And so if you're listening and you're on the board of an organization, or if you are the executive director and you're trying to recruit board members, understand how crucial this is. It's not just an administrative function. It is really a key component of the sustainability of your organization.
I'm a big techie, and definitely interested in AI. I heard rumor that bookkeeping is at risk to be replaced by AI. I was wondering what your inputs or your thoughts are about that, and in general, how does AI influence the financial market today and in the near future?
Yeah, bookkeeping is generally a high volume transactional type of activity. So anything that's high volume transactional is ripe for automation and AI. We already use different components of AI in our bookkeeping processes. Some of it's built into the tools and softwares that we use, that's essentially allowing you to process more transactions faster, more efficiently, without a human being involved in every single one of them. I think that's great. I think that is a way to get more done in less time. And it allows you to redeploy your resources to oversight, to have those controls in place, to have somebody who understands the financials, to be looking at them and giving you insights, to have somebody provide that level of control and oversight on what either the real life bookkeeper is doing or what the AI is doing. So I think leveraging things that automate is a great way to get more done in less time. And then you leverage the humans that are involved for the higher order things like insights, analysis, forecasting, predictability, and get the higher volume stuff that's more transactional done more cost effectively.
Yeah, makes total sense. I agree with that. Also, leaning in then to the superhero theme of the show, I was curious to know if you had a magic wand or some kind of superpower to change something in the financial nonprofit sector, what would that be?
So if I could wave my magic wand and solve something financially for nonprofit organizations, I would say it would be the ability to model and forecast decisions before they're, as they're making them. I've just seen so many nonprofit organizations, again, who are led by really talented executive directors and leadership teams in partnership with volunteer board members who have all these opportunities that they're trying to seize and all of these different programs they're trying to sustain. They're trying to make decisions without the ability to model it out and see if it will work. And it just creates a ton of stress for those leaders. Are we doing the right thing? Are we making the right decision? And it forces them to trust their gut, which might not always be reliable. And so, if I could wave my magic wand and give everyone access to information and insights that help support that decision making process, I think that's what I would do.
Awesome. Courtney, this has been great. I'm sure this is just the beginning of the conversation for some people, and they would love to go a bit deeper or get in touch with you for further questions. How can they get in touch with you?
Yeah, so we are at forgeahead.com. I'm also pretty active on LinkedIn. You can find me at Courtney De Ronde on LinkedIn. I love to connect with you there. I generally share a video every week of just something current that's going on in my leadership or the work that we do with clients. So forgeahead.com or Courtney De Ronde on LinkedIn.
Courtney, thank you so much for joining me today, and thank you so much for doing what you do.
My pleasure. Thanks for having me, Alex.
All right, that's it for today. I'm Alexander Lapa, and I hope you join me again in the next Agents of Nonprofit.